Hello, everyone. Once again, Kathy Lien, and this is Boris with BKTraders. All right. So with the inflation report, any piece of major economic data, it's all about expectations. It's not about the absolute change. It's about what the market wants to see, what the market thinks is going to happen, and what the market is positioned for. So, first and foremost, you can see from the forecast on this calendar, the inflation rate is expected to go from 0.4 to 0.3. This is the headline number. The core inflation rate is also expected to slow from 0.4 to 0.3. But do not be mistaken. Even though inflation growth is expected to slow from 0.4 to 0.3, that may not be dollar bearish. It may not be a bad number because, of two things. First and foremost, the overall inflation rate, the annual rate, which is what the Federal Reserve focuses on, is still, if you look one line up, expected to grow from 3.2 to 3.4%. And so that would represent an acceleration in CPI growth. So CPI is expected to accelerate from 3.2 to 3.4%. And the core inflation rate is expected to go from 3.8 to 3.7%. So still a very strong number. Because remember, central banks like to see inflation at 2%, around 2%. And the fact that it's, much closer to 4% than it is 2% is really, really bad news. So if you think about it, and you think about how it came off of this really good non-farm payrolls report, the market is dollar bullish. They're dubious. They're skeptical about whether a June rate cut is going to happen at all. They're already leaning towards something less dovish, something later. And then you have core inflation and inflation not expected to ease that much. If the numbers come in line pretty much with these numbers, what's going to happen is that you're going to see, what could happen, well, it's a moving parts. What I think could happen is you are going to see inflation moves that are happening continue. You're going to see the dollar retain its bid. You're going to see, stocks, maybe sell off a little bit because hot inflation is bad for stocks. And, you can possibly see gold correct a little bit. March CPI inflation data is less than 12 hours away, and inflation has been above the 2% target, the Federal Reserve's 2% target, for 36 straight months. And if it rises to 3.4%, it would mark the second straight monthly increase. And inflation has not jumped for 2 straight months since September 2023. So if that happens, even if the monthly growth comes in 0.3 instead against 0.4, which is lower than the previous month, it may not be enough to drag the dollar lower. And it probably won't be enough. And yes, Twitter is not a safe space. We got to know where to go. And that's what I tried to share with you. So the other thing that I think is very important to realize is positioning. How is the market positioned? You can see it through dollar yen that the market, is bullish dollars. Positioning. So we started this talk by saying that when we trade news, it's important to understand what is expected, what is, what by economists, what the market is anticipating, and what is priced in, and how traders are positioned. So traders are bullish. They are long dollars, particularly against the Japanese yen. So they are already positioned for this move against the yen. Now, euro, you'll see with euro has rebounded a little bit. But, so the dollar is pretty much flat against the euro. And if we get a hot inflation data, what I will be looking at is euro dollar, because ECB is expected to be dovish tomorrow. ECB is expected to pave the way for a June interest rate cut. Market is clearly cautious about being long euros. And so if we get a good number from the US, dollar positive number, I'm going to be looking to short euros. So euro dollar, dollar yen, and dollar Swiss are the trades and the charts that I'm keying up for the CPI report. And just to reinforce that, the market is bullish dollars already. That means that we have a weak number, and we need to understand what a weak number means. It means undershooting this 0.2 on a monthly basis, and your analyzed rate coming in at 3.3 or 3.2. If that happens, then we're going to get a dollar bearish number, and I think dollar Swiss, dollar yen will be the opportunities to the downside. And Eurodollar is double zip buying. So when we trade news, and with the inflation report, we never trade proactively. Sometimes we'll trade proactively if we have a strong opinion. And we may, the smartest way to trade is to basically wait for the news candle high or low to be broken. Boris is going to share with you his gold trading strategy and setup that is going to position us into gold trades. So he's going to be watching for that. So with Eurodollar, as I said, no trades. I know you guys are eager to get into trades right now. But if we get a dollar positive number, we're going to be selling euros. If we get a dollar negative number, I'm not going to be, even though I have a double zip buy signal, which means I have two white candles as my setup, I'm not going to be buying euros. I'm going to be selling dollar Swiss, which is pretty much the same trade, because I'm cautious ahead of tomorrow's ECB meeting. And I think that the market is going to be, I think that the ECB is going to be dovish, so I really don't want to be in the long euro position.
So I want to show you, this is the gold screen. And what the most important thing you kind of need to understand about gold is on the 1 hour trend. This is our proprietary scalp indicator, which I'm going to talk to you about. First of all, we can take a look at where the gold is today. It had a 64 basis point range. That's 64 100ths to 1%. So a little bit more than 0.5% move already in gold. So that's not bad, but it's still very, very muted. Sometimes it moves 1.5 to 2% a day. It's been a very, very active product. As we only want to be buying rockets because it's a very, very positive trade for the past 3 or 4 days. You can see if you're buying rockets, it's all been just profits over here for pretty much most of the day yesterday was just pure profits over here when you're buying these rockets. These are 1 minute bars that are basically breakout bars. Effectively, that's what you're seeing is just a big breakout bar. So once the breakout bar occurs, we like to go long the product, 2-point target on gold and a 4-point stop. A little bit of a negative risk reward ratio because these are very high probability trades. And almost all the time we get it done.
Well, the number is obviously very good because the dollar just shot higher. So we said we want to sell Aussie, sell euros. The 580 is where Aussie is at. Eurodollar is at 108.15. We're going to wait to see what the data is, but that's what I'm looking at.
So the data, I'm just sort of like, it was 3.5 against 3.4, which is hot. This I actually, all the core is 3.8 against 3.7.
Okay, so we have basically gotten our 10 pips. We're just going to scalp here, 10 pips in Eurodollar, see if it snaps back, and then we're going to try to get a little bit more on that.
So what's interesting is if you guys, it's going to take a second to just change to my chart, and I'm going to hopefully stay on this chart. The gold chart just went from fully bullish to bearish, and I think we're going to just sell gold a little bit here with a 10. We're going to just basically sell this little dumpster fire. We'll see if I got into the trade. I do have the trade on here. Let's see if it's going to work.
So Aussie dollar's also gone plus 10. So we're going to close that here. Look to sell again on a pop. So Aussie dollar.
As you can see, I sold it here at 53, and I think I actually, well, no, I didn't quite make the purchase. It didn't quite make the target. Here it is. Is it almost a target? Okay, let's just kill it, close it, close. Yeah, it just made target. So let me show you how that trade went on the charts so you guys can actually see it a little bit better. What we did here, just to kind of analyze it for you, this gives you just sort of ideas of how we scalp. Gold went, remember I said to you, I'm not trading gold short unless it goes bearish. It went bearish right away off the news. This is bad news, hot CPI data. So I suspect, like I was saying to you that the Goldman Sachs, they were leaking Goldman Sachs knew the number. I thought it was the exact opposite. Goldman Sachs likes to always pull the rug, which is, make the market think the number is one way, get everybody into a position, because if everybody bought on the close yesterday, they're getting killed right now. So anyways, point being is,
So at
price.
BKTraders, we got back in selling euro dollar at 108.06 and trying to ride it down. Bottom line here is that number was strong. We zeroed in on the trades that we were going to take before. We planned our trades. We said that we planned our trades. We said that we're going to short Aussie, short euro dollar on a strong US CPI number. That's exactly what happened. So we had our charts already keyed up. We sold Aussie, we sold euro dollar for, initial, scalp move, 10 pips, which is basically, you just kind of get in and out of the markets, try to grab, the pips when you trade this. And then, if it snaps back, we're going to go more, but we're already short back into euro dollar, and it's almost 15 pips already, again, in the favor. It's at 107.90. And I think that, euro dollar definitely has more room to go to the downside because the ECB is expected to be dovish. And so, that's, now that it's completely turned to the downside, I like it quite a bit. I think we're going to get to 108. There's some spike lows around 108.75. And yeah, so, the trades are working out exactly as planned. Sorry to interrupt you, Boris.
That's okay. That's okay. Now, so, Kathy's sort of trading the same idea as I am. I'm just going to show it to you visually. So gold in many ways is a currency, right? And you can see my alerts telling me that the NASDAQ now has turned into a dumpster fire. It's giving me a red candle alert. And we'll take a look at NASDAQ in just 1 second. But I just want to deconstruct the anatomy of the gold trade. As I said to you, really with gold, I do not go short unless the 1 hour trend turns short. And what happened today is look at this one, I'm shocked. The CPI number in just 1 hourly candle, it turned the whole, 1 minute candle. It turned the whole hourly trend, which was 4,000 bars long, just boom, went right back to being short. And now it, went bearish short over here. And as it went bearish, this was the selling candle, the first red candle off of a bearish trend that gives me this little dumpster fire signal. I got short. Now I trade with a 2 target 4 stop. That's a scalp trade. You could also have easily made this positional trade. You could have traded maybe with an 8 stop and a 4 target, and you probably would have made it both. But the type of style of trading we do is very risk controlled in BK for scalping for the prop account. This is my trade of a prop account, so I'm trading that live with you guys today. And there was a quick, very simple trade. You can see marked it on the chart here with my labels. We sold 53.8, bought it back 51.8. It was a nice clean trade. Now turning to NASDAQ and the NASDAQ chart, which also got very, very ugly. Just give it a second. And let me just go to the NASDAQ configuration so that you guys can see it properly. People are asking me how you get a hold of this indicator, the scalper indicator. This is something I wrote myself. It's only available to us in the BK room. I'll be happy. I'll post up I'll post up a link of how you can join me to pass the prop and join me, trading in BK room every single day. And you get access to this indicator, which gives you basically all the analytics you absolutely need to trade well. So, the only limitation, frankly, with the kind of trading that we do is that there's just one of me, and we can only do one trade at a time. There was obviously a huge amount. We could have done both NASDAQ and gold, given the setup that I showed you, and made money on both. But we kind of have a amazing amount of richness. what is that called? Embarrassment of richness, embarrassment of riches in terms of the setups that we have. We have far more setups during the day that we can take, given the amount of instruments and the good analytics that this thing provides. So you can take a look at basically at the NASDAQ chart and just sort of look at what the analytics are. And the analytics are is that, we had a 2.2% range already. Look at this, went from 400 to 18,120. Gee, I guess Goldman Sachs really made money on that one. I mean, I'm just laughing because look at what's happened before. Everybody was positioned. There was a rocket. Everybody was positioned for the long trade, for the big breakout trade, right? And then they just pulled the rug. I mean, truly, the greatest rug pull trade in the world is always out of them, and that's why I'm always thinking it's always the opposite of whatever the market is leaking. So huge rug pull. We went from buying to selling in one instant trade. You could have sold this over here. Again, I think this is probably going to be positional. We're going to be watching right now. We went bearish again. We were bullish before the market data. Now we're bearish. We're probably going to be building this bearish territory for a while. But I think the really interesting thing is will the market shake this off? Because this isn't the first time I've seen the market completely shrug off data and just go higher. More importantly, will gold shake it off? I'm going to be watching.
I personally, and I want to chime in on this, I personally think that, gold is so overstretched. Traders are looking for an excuse to take profits. And so I think this could be a little bit more of a durable move. We at BK, for our members, have actually turned the Eurodollar short trade into positional trade from a day trade. I think that this has more room to run. I think that Eurodollar is going to come below 107.50. This really pushes rate cut expectations to September. I mean, definitely not June, and probably not July, and probably all the way to September. So I think, this is, which is, if you think about it, a stronger dollar, later rate hike, the rate cut is going to be bearish for gold. And it says here that, let me see if I got some expectations. Now, I know it says the Fed swaps are now only pricing in 50 basis points of easing in 2024.
And yet, the gold is just printed a rocket on my chart.
What does rocket mean?
Okay, it means that there's a breakout to the upside. So, we're trading obviously on a short-term basis. This is a 1-minute chart, and what this actually means is that this is a move of more than 7 basis points. That's 7/100th of 1%. Like sort of, it's just think of it as a big stretch. This is a more than a normal stretch away from the moving average, and that is what a breakout is. A breakout is basically a big move away from the average. Generally, that is a continuity trade. Now, especially if we marry the short-term signal with a long-term signal. Right now, the long-term signal is a little bit contrary to our short-term signal, which is why I'm not taking it. There's no confirmation because the long-term signal is actually still very bearish. This could just be a sort of, a fake-out move. But we love, this is why, by the way, I sold it the other way, because remember, the longer-term trend was bearish, and we had a big selling signal on the short-term charts. But my point is, having traded gold for quite a while this whole year, and just seeing how bullish this thing is, it's really become like Teflon. It's just completely indomitable. Because, for every fundamental reason that you would think, gold should be going down. If the yields are going to stay up, gold's a non-yielding asset. Therefore, it's, treasury bills are a great competition for it. Why would anybody want to be buying gold? But that's not why people are buying gold. People are buying gold because of sovereign debt risk. That's what I'm sort of starting to really understand on a fundamental basis as we trade this technically every single day. And what that means is it doesn't matter that your yields are high. That's just a bad thing. That's what you see, by the way, gold is going. I probably should have just gone long here, gold, because this technical signal really gave us a good continuity trade. The reason why higher yields is actually positive gold is because people are scared that this is going to create a sovereign debt crisis, that the U.S. government is going to have to pay such high interest rates for such a long time that it will not be able to finance these massive deficits, and the Fed is not going to be able to control inflation. We had a sell trade, a dumpster fire trade here, made money, dumpster fire trade here, made money, dumpster fire trade here, made money. Did not take this one and did not take this one. Either one of those, both would have made money for us. We just simply, we're focused on NASDAQ. But overall, so you're talking about 7 winners against just 2 losers in the scalping session. So I hope you guys really enjoyed that part of it. I'm going to post my links again here. If you guys want to do this with me every day, if you want to have the ability to pass your prop, what I do is the following. I'm going to give you the link to our favorite prop firm. Gives you massive discounts, like literally the price of brunch for a $50,000 account. So all you got to do is pay for that. And then if you want to pass the prop, you take this course with me for 3 months. Really great. We threw everything into the kitchen sink here. Not just my ideas, but Kathy's ideas, not just my indicators, but Kathy's indicators. full support, and this is really, really valuable. Like, I see this every week at how valuable this is. Every Tuesday night, we have a coaching session, and we go through, because, in live trading, it's like war. You really don't have a chance to think. You're just reacting. And it's hard to really fully learn in an active combat environment, right? Once you become, once you come into the passive prop program, then we'll give you huge discounts.
Come join my Monday live streams, where every Monday at 8:45, I talk about what's going on in the market for the week ahead. Boris is there as well. So join us Monday, 8:45. We will see you all then.